I'm Dan Fitzpatrick at StockMarketMentor.com on Friday, November 22nd. And in this video, I want to look at Footlocker. A company announced earnings on Friday, and guess what? They were pretty good, right? Look where the stock opened up. And by the way, I forget whether they announced them Thursday night or Friday morning, but the bottom line is when the market opened today, everybody knew what the earnings were. Stock gapped way up above real established resistance. 4 times, actually 5 times the stock tried to push above there, and then we got a big massive gap. Now, this wasn't a gap that you wanted to buy, and of course, you know, it's obvious now. It's easy to say, oh well, yeah, that's what you're saying now, but what would you have said then? I would say the same thing for this reason. The stock has already run quite a ways. It already run a lot. Look at how the 20-day, let me get the right tool here. 20-day moving average was really steep. 50-day as well. So this had already had a big run. When they announced earnings, and short interest wasn't an issue, but they announced earnings, the stock gaps up this high. Think about this. All the folks that bought here, why do you think they bought it? Just because they like Footlocker? No, because they're expecting good numbers. So you got folks that were long at 30, 33, 34, 35. Suddenly the stock gaps all the way up to 39, where they had bought just a few weeks earlier. That's a move that's going to be sold into. It was already well extended. Now compare that with Green Mountain, a stock that I covered this on the evening, I think it was Wednesday evening, in the free chart video. You can go check it out. And at the time, the stock was trading up after hours. Stock was trading up after hours, and it was right around this level here, right around 64-ish, something like that. And I was saying, you know what? They announced good earnings, but the stock isn't really trading up enough. It's not even trading above this resistance level here. And so this is a stock I think you don't want to buy. You don't want to buy it because it's not even gotten above the resistance level. I also mentioned, by the way, if the stock moves above 65, then basically not. Forget what I just said because it was wrong. But what I didn't say, and I just kind of wasn't thinking about it at the time, my bad, look how tight the stock had been squeezing. See, it wasn't extended. It wasn't really extended. It already had a major sell-off here. It wasn't extended, and so the stock gaps up, and you look at it from the get-go, like right away, 2 minutes, 3 minutes into the market, the stock is moving higher, and that would have turned out to be a really good trade. On the other hand, Footlocker had already had a big move, gapped way up, and I'm talking just a few minutes into the market, you know the stock is drifting lower. So these are two gaps. One, Footlocker here is a gap and crap. The other, Green Mountain Coffee Roasters, what do you call it, whatever you want, gap and go, gap and run, gap and yippee-ki-yay, whatever. So there are two different ways to trade gaps depending on where the stock was prior to the move. With Footlocker, would I buy that? Now, I'd probably buy Deckers instead. Do you know why? It's working. Footlocker probably has some more work to do. So, okay, members, to the weekend update, got some financials that we're looking at, as well as healthcare and biotech. There's a lot of stuff going on here. I want you in there.